we're hopefully going to discover in this panel that data is in fact better than oil because we don't have lack of resources when it comes to lack of content and depth when it comes to data. In fact, more data is created as we speak, whereas obviously any other natural resources has limited time. So I want to start by really asking David here, who is the COO of the Nairobi Securities Exchange. When it comes to data as the NSE, how have you seen the evolvement in terms of the data contribution towards your overall exchange's revenue? And if you can give us a bit of understanding on how this has evolved over the past 3 to 4 years.
In the past 3 years or thereabout, we had a very, very key strategy around our data product that was aligned to our non-trading income as an exchange. Exchanges are in the business of channeling data. That data has to be distributed through channels. We have very, very mature data feeds, and I was happy to see what Egypt is doing. Once that data gets to the market, it is the work of the market to interpret that data. So for the past 3 years, to your question, we have seen phenomenal growth. 3 years ago, our data revenue was standing at about 270,000 USD. Today, we are speaking around fivefold of it because this year, we have already crossed the $1 million mark, and it's growing.
Thank you very much, Selua. So for us as well, data is actually a relevant growth driver. Currently, it represents 22% of our revenues. Yes, 22%. And, this was a deliberate effort on our part because around 6 years ago, we noticed that the data revenue was the fastest growing revenue line for the exchange at the time. And so we put in place certain deliberate strategies to ensure that we grew that to where it is, and we even have a higher aspiration as to where it's going. Now, one of the things that we did was to leverage on our membership of FISD, and I know that that's one of the things that was shown by the Egyptian exchange as well. And one of the things we did was basically to find out what more advanced exchanges were doing in terms of their data, the classification, the pricing. And so one of the things that we noticed was there was a need to reclassify our data, basically. It seemed as if we're giving out too much in terms of that data. And so reclassification happened. The next thing also, and the earlier presenter had pointed it out, was the need to understand the business of the data vendors. Because in understanding the business, one would understand then the type of license they had and how they were using their license. So by the time we carried out audits and did more investigation, we found out that data vendors, some of them were using more than their licenses provided for. Then the other thing that we then did, because and I think he had alluded to the fact that you throw out the raw data basically to the market. But we realized that there was now a need for us as an exchange as well to do more analytics on our data. And so we created new products that, were tailored to certain stakeholders like the issuer base. So for example, we created what we call the investor relations line, which was not just giving them raw data, but actually analyzing the data to suit what the issuers needed and what their own stakeholders and shareholders needed. So
and in terms of the usage of the data, and obviously as Iran has mentioned, is that the types of users have increased. So in the past 10 years, we've seen new entrants because of the way the content is used. So therefore, securities exchanges, generally speaking, have to make sure that they service that demand. And this is where the growth and the trajectory is for most securities exchange. And of course, also the ability and the availability of the data across asset classes is absolutely critical.
Coming from the Kenyan market and working across sub-Saharan Africa to help financial institutions understand how their data was sitting and how their trading was happening, we realized that first, the institutional infrastructure was not in a manner that you could understand what the data was saying. It was raw information. And one of the biggest challenges that has been there in the past has been the cost of accessing this data from the vendors who are available, because then it looked like the cost was high, but the financial institutions had not visualized what they could do with that information when the information is put in a manner that can tell a story or can be used. So going ahead, I think that today we have a lot of information that is available as data. There's a lot of data analysis and business analytical solutions that are available for financial institutions to understand what the data is telling them. The other thing I find is that I was sitting at the back and talking to somebody from one of the exchanges in Africa, and they are trying to clean up their data, clean up their raw data so that it can be able to tell them a story. But there are other exchanges here that are way ahead of probably those who are still trying. So historically, what I've seen is coming from the commercial banking side is that the banks, some of the bigger banks realized that, you can't clap with one hand. And so they would have to collaborate in terms of educating and supporting others to come to speed. To come to speed in terms of knowledge, to come to speed in terms of creating lines and capabilities to trade. Work also with the regulator to enable the regulator understand some of the products before they come to market and to support the market in moving forward. So going ahead, I see that the financial institutions need to leverage the data that's available through the vendors and the technology that is able to make this data come to, for them to be able to use it.
How do you see technology infrastructure support growth in data dissemination and obviously ultimately impact revenues for the institutions that are disseminating the data?
Technology is more like an equalizer in terms of we are able to get to more markets using technology. We are able to disseminate more information to clients in terms of, be it trading data, be it company financials, corporate actions, be it market news and market events. And increasingly, we are seeing that trading is becoming a time-sensitive endeavor, where every second that passes, opportunities are born, opportunities expire. So it is critical that technology comes in and is able to deliver that in a timely manner. At the core of this technology, basically, is the internet, where people are able to then, from across different regions of the world, using different diverse devices, are able to access that particular core information in a uniform manner. Does not matter if you're coming via mobile phone, whether it's an Android device, whether it's an iOS device or otherwise. Does not matter where physically you're located. We are seeing investors demanding more data, and they are demanding it right now. And technology basically comes in to bridge that gap. At Synergy, for the Nairobi Securities Exchange, we strive to provide that data from the time it happens at the exchange in terms of a trade or an order. We're able to get it to market in under 3 seconds.